who is the vice chair of the Indirect Tax Committee and comes from the Netherlands and works for the eminent firm of Lawyer and Loaf. And she's also one of CFE Tax Advisors Europe's representatives on the European Commission VAT expert group. And she's going to talk about fixed establishments, which are one of the key territorial concepts in VAT. The other speaker who's going to come on later is Raffaele Rizzardi, who's a very eminent practitioner, professor, and dottore commercialista from Italy. And he'll come and talk about distant sales after Trudy has completed her presentation. So without further ado, I'll hand you over to Trudy.
Thank you very much, Jeremy. Welcome, everybody. As Jeremy...
One other point of logistics, sorry, that I ought to just make is that during the course of the presentation, if you've got any questions, please use the Q&A box, which will send a message to me. And then after Trudy has completed her session, I'll then try and give her some questions, and likewise with Raffaele after he's completed his talk. Sorry about that little interruption.
Thank you, Jeremy. As Jeremy mentioned, my topic for today is the fixed establishment for VAT purposes. And on the next slide, we will see what it's all about and why is it such an important topic. Well, in a number of cases, the VAT fixed establishment is important because it's about compliance and about registration. Because as a fixed establishment, as a general rule, it will be necessary for such fixed establishment to be registered in the country as such where it has its establishment. And it has to comply with the local rules as if it was a resident company. Also, the concept of a fixed establishment is relevant when it comes to recovery of VAT. Because as I just mentioned, as a fixed establishment, the fixed establishment needs to be registered in the country, and as an upside to that registration, it is entitled to recoup the VAT charged to it, input VAT, so that's quite easy. Whereas as a non-company with an establishment in a member state which does not qualify as a fixed establishment, it is necessary to apply a different procedure to be recouped for the VAT on costs. That implies that through a portal refund procedure, the VAT is recovered. But the main relevance of the concept of fixed establishment comes down to the question, in which country is VAT levied when we're talking about cross-border services, B2B cross-border services, where services are rendered to recipients in another country. There the question arises, in which country in which member state is VAT levied? And the basic rule is for B2B services is that VAT is levied in a country where the recipient is established or has a fixed establishment which received the service. So there we see the main importance of the question whether or not there is a fixed establishment. So it's all about place of taxation. It is important not only for the recipient, but also for the supplier. So both for the supplier and for the recipient, it is important to determine whether there's a fixed establishment present in such cross-border service situation. The supplier needs to know whether there's a local fixed establishment in order to decide whether he should charge his local VAT or whether there's a reverse charge applicable in case of a cross-border service to a non-resident entity. So there we see that the recipient under the B2B rules has to self-assess the VAT on the service received from a supplier in another member state. So we see that it's important both for the supplier and for the recipient of the service to determine who is the actual recipient of the service. Is that the establishment, main establishment, or is it a fixed establishment in another member state? Recently, on the 7th of May, the ECJ ruled in a case about the fixed establishment issue. And there the question was whether a subsidiary qualifies as a fixed establishment of the parent company. We will discuss this case in more detail in a minute. But first, I would like to start with guiding you through the main conditions in order to be able to decide whether there's a fixed establishment or not. This is all in the in Article 11 of the implementing regulation. And this article says that there should be an establishment with a sufficient degree of permanence, with a suitable structure of human and technical resources, which enables this establishment to receive and use the services bought. That's what the implementing regulation says, and that's not the only thing which is relevant, of course. It's also relevant what the guidance is of the ECJ when you look at the court cases which it has ruled about the concept of a fixed establishment. It has ruled on several occasions, and I've selected two important ones for you. The first one is DFDS, where it was about a travel operator margin scheme, and also there the question was whether a subsidiary may qualify as a fixed establishment. That was quite a particular case, because there it was, like I said, about the travel operator margin scheme. It was about a UK parent company which has a Danish subsidiary, and it rendered travel services, so it sold travel packages to travelers. And the question was there whether the UK subsidiary qualified as a fixed establishment of the Danish company, and the question was yes. We will get into that in more detail later. The second important ECJ case as it comes to fixed establishments was Welmery. And in Welmery, the court said quite strictly that you really have to look at the definition of the implementing regulation, but it emphasized that the fixed establishment concept can only be relevant in case taking into account this fixed establishment would lead to a more rational result than taking into account the main establishment of the company, of the customer. So that's, these are some basic principles I think we have to take into account when we look at the case which I wanted to discuss with you today. So next we will see a picture of Dongyang electronic case. What are the facts of the Dongyang case? Dongyang is a Polish supplier. We see it here, and Dongyang renders services, and it has contracted with LG Korea, a Korean entity. It renders services, and these services consisted of the assembly of printed circuits boards from materials and components. So it was rendering services, cross-border services, to a Korean entity based on an agreement with that Korean entity. So it assembled materials and components. And these material and components were owned by LG Korea, so by the Korean customer. They were physically provided to Dongyang by the subsidiary of LG Korea, so LG Poland. So even though the materials were owned by LG Korea, they were actually provided to Dongyang in order to be assembled by the Polish subsidiary. But the agreement was, as I said, for the services, for the assembly services between LG Korea and Dongyang. The question which was referred to the ECJ was whether the mere fact that LG Korea had a Polish subsidiary, whether this Polish subsidiary constituted a fixed establishment of the Korean entity. And when we look at the picture, we see what happened. Initially, Dongyang sent an invoice to LG Korea based on the agreement which it had for the services. So it issued an invoice to LG Korea without VAT. And why was that? That was based on the rule which I just discussed with you. B2B services are subject to VAT and are deemed to be rendered in the country of the recipient. So Dongyang was assuming that LG Korea was the recipient of the service, and as a result of that, no VAT was due because the place of supply and the place of taxation was in Korea. But that was not what the Polish authorities thought. They said, well, we have this Polish subsidiary. It qualifies as a fixed establishment of the Korean entity. And therefore, the service is rendered to this fixed establishment. And the place of supply and the place of taxation is therefore Poland. So Polish VAT should have been charged. Well, two questions were referred to the ECJ. First one, as I just mentioned, does the Polish subsidiary constitute a fixed establishment as such? And if that's not the case, was Dongyang Electronics required to actually inquire into the contractual relationships between LG Korea and LG Polska? So between its customer, LG Korea, and the local subsidiaries. And what was the ruling of the ECJ? The ECJ said, well, first question, the answer is no. So the mere fact that there is a subsidiary present in Poland does not result in a fixed establishment. But on the other hand, it said it cannot be ruled out that there is a fixed establishment under circumstances. So not by definition, but under certain circumstances, there can be a fixed establishment present. And as you remember, on the first slide, we briefly touched upon the DFDS case about travel operator margin scheme, where the court ruled that a fixed establishment was present, and that was in a situation where taxation in the country of the fixed establishment, the UK, resulted in VAT being due, whereas if the place of establishment, in this case Denmark, was assumed to be the place of taxation, there would be no VAT due. So there were different rules applicable in these two member states. So VAT was levied eventually because the fixed establishment was taken into account for the place of supply. Here, you could say the court confirms that what it had ruled in DFDS is still applicable, which means that under certain circumstances, there can still be a fixed establishment, even though there is no own staff, but only a fixed subsidiary present in member states, but not by definition. So you could say, what's new about that? Well, perhaps not so much. I think we all hoped that the ECJ would have said that according to what the Advocate General had already stated, that in her opinion, only in very specific circumstances, there would be an option to have a fixed establishment via a subsidiary. But that's not what the court said. It said it is possible. So we have to live with that. And then the second question, the court said also quite obviously, well, you cannot expect from Dongyang as a supplier to really dig into the contractual relationships between the two entities, so the Korean customer and its subsidiary. That is too far-fetched. Next. So on the next slide, we will see what is the state of play after ECJ Dongyang. Well, we already mentioned it. The mere holding of a subsidiary not necessarily indicates that there is a fixed establishment. However, the court said it cannot be ruled out that under circumstances there is a fixed establishment if there is an EU subsidiary. It also said that the legal form is not decisive, but that economic and commercial reality should also be considered. So there, the court says, well, you always have to look at the actual facts and circumstances. You have to look at the economic reality. And that's, I think, in line with, well, the jurisprudence of the European Court for the last couple of years. And I'm sure that we will all agree, Jeremy will agree, that the court has taken quite an economic perspective when we look at several court cases also on very different topics. Now, as we just said, the supplier does not need to inquire into the contractual relationship between the parent company and a subsidiary to which he renders services. And the court did not explicitly mention this, but I think that based on the Welmery case, the fixed establishment can still only be considered as relevant if the place of business of the customer, in this case Korea, does not lead to a rational result. So it can only be relevant in case there would be no taxation where you would say the place where the services are used are not at the place of primary establishments. So that does not lead to a rational result to only look at where the customer is established. You have to look further than that and look at, well, is there actually a fixed establishment, because it makes sense since the actual use is in a different country than where the customer is established. And an alternative situation where we have to look at the fixed establishment for the place of supply is when it creates a conflict with another member state. And I think that's the example of the DFDS case, where we had the subsidiary which was in the UK, where we would have taxation, and the primary place of business was in Denmark, where there would be no taxation. Next, what are the practical implications when we look at this issue? Well, it's essential that in B2B cross-border services to a non-EU customer, like in the case Dongyang, we have a Korean customer with an EU address or an EU subsidiary, we always then have to analyze whether a fixed establishment is present. Does the EU address or the EU subsidiary create a fixed establishment? Because if the answer would be yes, there would be taxation in the member state where this fixed establishment is present. But it also is important to look at this when we have an EU customer with an address in another member state or a subsidiary in another member state, in particular, like in DFDS case, where we would have different VAT treatments. And also if the VAT would not be fully recoverable for the recipient, then we also have to really take care and really watch the situation and analyze whether a fiscal rational result is still applicable, and if not, there may be a fixed establishment. What the courts also emphasized it that the contractual relationship between parent and subsidiary do not need to be analyzed. So we will still have to really, well, sometimes be doubtful about when we have a subsidiary, whether that qualifies as a fixed establishment. So that's different from corporate income tax, because I'm not a corporate income tax specialist, but I understand that the basic principles for corporate income tax say that the fact that the parent company controls a subsidiary shall not in itself constitute a permanent establishment, but that it is different, so that there will be a permanent establishment if the subsidiaries' offices are put at the disposal of the parent company and employees of the parent company who work from these locations. And the subsidiary has the authority to conclude contracts on behalf of the parent company and generally makes use of these authorities. And unfortunately for VAT, we're still stuck with the question under which circumstances shall we need to qualify a subsidiary as a fixed establishment. That's still a gray area, and the DFDS case is, well, quite an obvious one, I think. But when we come to other situations, it's doubtful and it's uncertain and it's a gray area. Once we have established a fixed establishment, then we always have the question, is it a fixed establishment which receives the services, or is it the head office? And what the implementing regulation says, you have to, as the supplier, need to verify what is the nature and the use of the service in order to determine whether your service is rendered to the head office or to the fixed establishment. And second, you have to check the contract, the order form, and check whether a VAT identification number is communicated by the recipient as the actual recipient. And if that's still not conclusive, then the supplier may legitimately consider the service to be taxable in the country of the customer, so the head office. So there are two steps. First step is there a fixed establishment? Well, maybe three steps. There are three steps. First question is there a fixed establishment? Well, if yes, then you have to look whether this fixed establishment and taxation at this place makes more sense than taxation at the place of the main establishment. And as a third step, you would have to look at, well, who is actually the recipient? Is it the head office or is it the fixed establishment itself? And then you have to take the three steps which we just mentioned. And if, well, the answer is no, there is a fixed establishment, but the service is not rendered to the fixed establishment, then you can safely issue your invoice, as obviously was done in the Do-Young case. The invoice was issued to the Korean entity, and apparently that was correct because that was the recipient of the service and there was no fixed establishment in Poland. What are the questions which are remaining? Well, as I just said, under which circumstances will a subsidiary qualify as a fixed establishment? And there's also another case about a fixed establishment, which is still pending at the ECJ. That's the titanium case, C93119. And that's about the question whether a branch must have personnel or in case of leased property, perhaps there's no need for personnel, and perhaps without even having staff available in a country, but only a property which is leased out and which is serviced by a third party. The question is whether that's sufficient to qualify as a fixed establishment. And for the moment, we assume that only having a leased property does not qualify as such, so it's not sufficient in order to have a fixed establishment. But the court will have to give a final answer on that. And by saying that, I think this is what I wanted to share with you today. So Jeremy, perhaps we could see whether there are any questions.
I don't believe there are any questions at the moment, Trudy.
Or do you have any, Jeremy?
I think it's unfortunate, isn't it, that the European Court hasn't given us really any guidance for helping to determine when a subsidiary should be considered to be an establishment and when it isn't.
Yeah, exactly. Quite, yeah, not surprising, but it's unfortunate, so to speak. In particularly because the Advocate General had already tried to, well, suggest that as a general rule there should be no fixed establishment present, and the court said they ignored that. They said, well, there can be a fixed establishment, which is the other way around. So we will have to wait. I think it's very difficult in practice to decide. So it's not like for corporate income tax purposes, apparently they're straightforward.
I think one could tell from the Welmery case that it's only meant to be in fairly limited cases, rather exceptional cases, that it would be right to view a subsidiary as a fixed establishment. But it's still unsatisfactory that we just don't know what are the guiding principles particularly clearly.
Yes, and what are your thoughts about the pending case? Do you expect any prizes?
Well, like you, I can see the force and the view that it isn't, but we'll have to wait and see.
Yeah.
So thank you very much, Trudy. Raffaele, are you around?
Yes, I am. Yeah.
Okay, so welcome, Raffaele.
Thank you.
Very nice to see you.
Colleagues.
Dear all, I'm sorry just to interrupt. I'm just stepping in because we have probably a question from one of the attendees, Mr. Roberto Dalla Porta. Mr. Roberto Dalla Porta, I am unmuting you, and you should be able to speak soon. It does not
Nothing happens.
seem to be working. So what I'm doing temporarily, Mr. Roberto Dalla Porta, I am promoting you as panelist temporarily, and then I'm promoting you back to attendee, so you can ask your question. Mr. Dalla Porta, you should be able to unmute yourself now. Mr. Dalla Porta, try to unmute yourself. All right, very sorry about that. I believe the best way to proceed is, Mr. Dalla Porta, that you write your question in the Q&A and we will address it soon. Sorry about the technical problem, and we go back to the normal schedule.
Okay,
Sorry, Jeremy.
So Raffaele, do you want to start giving your presentation? I gave a little introduction about you at the start of the podcast. And I understand you're going to be talking about distance sales.
Yes, of course. Can I have my slides inserted? Sorry, it's coming. Well, so we're speaking about new rules for distance sales business to customers. And many of us were closed at home during 2 or 3 months, and we exceeded in purchasing, my family also, which never earlier purchased on internet, and now it's increasing. In Italy, we estimate that during the lockdown time, the online sales of goods increased by 2 to 3 times. So this is a very huge idea. What is the aim of the new rules? We can go to the next slide, and we make steps which were done up to now. They started in 2017, and it's a so-called VAT e-commerce package. The idea is European Directive 2017-2455, amending what we call the recast, that is a basic text of VAT, which has now over 20 amendments, and Directive 2009-132, which concerned exemptions in intra-EU, for instance, package and gifts and so on. When we have a directive, we have a parallel council regulation 2454, and this is amending regulation 904/2010 on administrative cooperation. This is a very important regulation for the practical point of view. It gives what is identification numbers, what we call the VIES, that is the inter-exchange system. And we have an implementing regulation concerning 282/2011. This is a very important regulation for details, for instance, for the place of supply. This was expected to start at the beginning of 2010, when Directive 2008 changed the rules of place of supply services. And after, it gives many ideas also on what we heard earlier, the supplies to a permanent establishment. There are many points to make this check. Concerning permanent establishment, next week I have to make a lesson to the Ministry of Finance concerning transnational operation, mergers, and acquisitions, and so on. And I will speak to them, probably they don't know, of the Societas Europea, because the Società Europea can be the issue of further changes in our operation. And if a Societas Europea incorporates other countries' corporation, they change from independent corporations to fixed establishment. At the end, about the end of 2019, 21 November, there were additional measures for VAT commerce package, the Council Directive 1995 and the Council Implementing Regulation 2026. Then we arrived to this year, 12th of February 27. Details of the working of the VAT one-stop shop, OSS, which I will speak in shorter times, and this regulation laying down detailed rules for the application on administrative cooperation for a one-stop shop. In a moment, I would say for attendants, which probably is the first time they hear this term, is a system by which a company based, let's say, in Italy, selling to private people, to non-business in all over Europe, may succeed in paying to the sales the VAT of the destination with the destination principle, but they don't need to register in all other countries. They do it everything on the same place by their tax administration. Of course, they must report and return saying which VAT they are paying, and also the rate is the rate of the consumer. 8 May 2020, in the first emergency, there was a postponing of the package to 1st July 21. For this should have been started from 1st January of 21. And this due to practical difficulties created by lockdown measures. This is not the time to speak it today, but 1 year later, that is 1st July 2022, we will have the biggest bang that is also a one-stop shop system for B2B business. Which is the aim of all these measures. One aim is to increase tax compliance. And in the documents of these days by the European Commission, they say that all this VAT e-commerce package will have a return for the all income of the states of they estimate 7 billion euro of income. And but you know, what we call the VAT gap, that is how much VAT according on macroeconomic calculations is missing. We arrive in the last estimate to 137 billion euro, and this the expectation is to be reduced by the second big bang, 1st July 2002. For to have carousel fraud, you need a purchase without paying VAT. So the ones reselling goods charges VAT, and if it doesn't pay, there is a loss, which is not on a value added, but it is on the full consideration. We can go to the next slide. New rule for distance sales. Here we are. One idea is simplifying VAT obligations. For if I have to pay French, German, Czech, and so on VAT earlier, earlier up to now, I have what we call a protection threshold that is up to, generally it is 35,000 euro. I can sell to private people by charging my VAT, not their VAT. But over this threshold, I must register in that state. And this, there is an enormous increase in all these years. For a marketplace like Amazon, they are selling many things they purchase, they have in their warehouse. But there is a big activity, whereas Amazon is not the seller of the goods. It's only a marketplace, and the goods are shipped by small companies all around Europe. And so there are quite a lot of necessity now of registration. If you go exceed 35,000 euro, you must register in the destination VAT. And also the present system has a loophole. That is, it's all based on one who is shipping the goods. For instance, our Belgian colleagues told us that if Belgium wanted to pay Luxembourg VAT, which is lower, he goes to Luxembourg, he purchases, for instance, pieces of furniture, is not able to take on his car, but it's only sufficient that he is charging a carrier to take it to Belgium. So this is a lack which is going to be solved. For in that case, the new system, one-stop shop, you must identify where is the residence of your final customer, and you charge his VAT, not your VAT, not the supplier VAT. So simplifying, for if we want to go to the destination principle, at present we should to be identified in so many states. And mini one-stop shop is already existing since 2015, but it is for what we call a TBE, telecommunication, broadcasting, and electronic services. This mini one-stop shop is the basis for the new big one-stop shop. It is a simplified system to declare and pay VAT to the customer's residence, of the customer residence, but the VAT is paid to the tax administration of the place of residence of the supplier. OSS, an improvement for there it was, let's say, mini one-stop shop was a test of the new system, is an improvement of the current MOSE with a special provision applicable to supplies of goods facilitated by electronic interface. Extension of the scope of the MOS turning into a one-stop shop. What will be served by one-stop shop? B2C supplies of services other than TBE services. For instance, if a lawyer makes an advice to a private person of the other states, presently must calculate his VAT after he will calculate the VAT of the place of the customers, and will pay this through OSS. Intra-EU distance sale of goods, it is goods which are shipped by to private people of other countries. As I told earlier, we had an enormous increase during the pandemic, but I think it will be not so heavy. But in any case, we now are acquainted that some things are better to be purchased online. They are more complicated, more choice. So in any case, electronic commerce of goods is very important. And so we must assure that the VAT is correctly calculated, paid, and also the compliance. So certain domestic supplies of goods facilitated by electronic interface marketplace can be also and the other problem concerns goods coming from outside the European Union. For there are quite now very complicated rules of the value up to 150 euro, and also there is an exemption, and this is why when I received goods when I was at home, many shipments from China were 15, 16, 17 euro. They don't pay either customs duties or VAT. This will be discounted. In any case, there will be a system also to for an operation concerning imported goods of any value. We go to the last slide, which is the title is the same, new rules for distance sales. And I go back to the case I made earlier. You order on Amazon. Amazon is not shipping to you the goods, but is giving an advice to the smaller company which are supplying, and they will be deemed to be suppliers of the goods. They are in charge of the VAT payment. Consequently, they have to collect and pay the VAT on these sales. As I told earlier, increased by 2 or 3 times, the trend will continue, and the risk of incorrect application of VAT is increasing. I also have seen many documents with the wrong VAT or no VAT indicated. What does it mean? It is included in the price, it is paid or not. The new measures are really necessary. And now, considering we have our friend Jeremy, which is our coordinator, the Brexit changes the non-EU schemes for supplies of TB services by taxable person not established in the EU. This is a directive of 2002. For earlier, it was very amusing. We charged VAT when the supplier was in the EU, and non-EU could sell to Europe legally without calculating. And also, when I was in Brussels in the year 2000, when they presented what will later be the directive, and I had a question, but in case of non-compliance by a non-EU seller, how can you enforce? Well, this, the first answer was No, we cannot do nothing. We must hope they will be compliant, but if they don't, we have no power. And I repeated that we are probably to be Latin, but in our right, a law which is not enforceable is not a law. Do you know what they answered to me? Don't worry. European services are peanuts. And I didn't. This was in the year 2000. I was about to say, but if they're peanuts, why we're worrying about charging VAT? But the intelligent question was, but are you sure that in 20 years' time there will still be peanuts? Of course not. And as I just told very quickly earlier, an import scheme will be created covering distances of goods imported through the countries to territories or customers in the EU, up to the value of one. So all small shipments will be operated by a special import or one-stop shop system. At the time, the current exemption of goods of value up to 22 euro is to be dropped. Expected increase in VAT revenues for member states, 7 billion. So this is a very important step. We should have had it in 6 months' time. We will have to wait for 1 year, but of course there are many things to be settled. And since I'm speaking of this new next steps, I have just to say one word on CTP. What is CTP? CTP is a certified taxpayer, which will be very important for the definitive system of B2B commerce. A certified taxpayer is something like authorized economic operators as customs, but in the earlier documents of the European Commission, this should have been started earlier than the new system would. At the present, it will start every time, everything all together. That is middle 2022. But the real issue is that to get a recognition of being a certified taxpayer, it takes quite a lot of time. And so we risk that we start the new system, we will have rules for certified taxpayer, but we will have no certified taxpayer. Thank you for your attention.
Raffaele, thank you very much for that. I think the new changes will make life a lot more difficult in some ways for a lot of businesses doing transactions in the EU, because they're going to lose the benefit of the current distance sales rules, and they're going to suddenly have to be able to work out how much VAT they got to charge using a different country's rules. So I think that's going to cause some difficulties for people. So it may cause some greater compliance in some areas, like imports from outside the EU, but possibly extra difficulties in others.
Yes, sorry. Another big issue we've spoken many times in our fiscal committee of CFE is to know exactly which rate is applicable in the other state. For the European Parliament says, oh, it is an issue, we will make a database, but you know, I've been studying VAT since more than 50 years. Yeah. I remember French text when they say how we are complicated. We have mushrooms, fresh mushroom, one rate, dried mushroom, another rate, and so on. But if you are in the state, you can manage this. But if you are abroad, you risk. And you remember that in our opinion, we say that at least don't give us penalties if we are wrong with rates.
I think what the European Commission is thinking, but this I think only works with goods, it's much more difficult to see how you can do it with services, is that they may adopt classification similar to the customs codes and try and provide guidance to people by that methodology. But that may work with goods, but it's much more difficult to see how you could apply it to services.
Yes, but also the rules, not all can be superposed. We have, let's say, 20 states, one rate, the other one distinguishes between two variances.
Anyway, thank you very much for that. And just before you started speaking, we had the problem in trying to work out what Paolo Fianzoni's question was. And the text has come through and he's asked us all what our views are about whether it's really time to move on from the concept of fixed establishment and permanent establishment, because they cause too many problems. And he asked what's our views on that. So Trudy, do you have any views on that issue?
Well, I think in any case, it'd be good if we would have the same principles for VAT as for corporate tax when it comes to the definition of these principles. But I'm not sure whether we can do without it from a VAT perspective, because we have to always look at what is the most logical place of taxation, and that can be by definition, or that should be by definition, the country where the services are used. So if we would have a fixed establishment and the services are used in that country, I would say we would, by definition, need to have the fixed establishment as a concept in order to have a proper taxation.
Yeah.
I don't know whether...
I suspect you're right. You do need a connecting factor to connect people to a particular jurisdiction. And clearly, it can't be appropriate that you're just connected with the country you're registered, because if you've got a lot of business happening through a permanent establishment, it's appropriate that that's taxed in that place. Raffaele, do you have any views on that?
Yeah, no, it is a similar terminology question. It concerns the beneficial owner. For there are two significance. One is for money laundering, and one is for direct double taxation agreement. They use the same time, but it has two significant. Probably, also in my opinion, I agree with Trudy. There's no reason to have permanent establishment and fixed establishment. We must merge both signification. For otherwise, we risk. Now, there is in my opinion, there is a problem in direct taxation. We have personal fixed establishments. But in VAT, we shouldn't have personal if there is not a real presence of people.
Are there any other questions anyone wants to ask Raffaele?
We are connected with how many people, you know?
I think there are quite a few. Anyway, I think on that note, I say thank you very much to both Raffaele and Trudy for a very, very interesting series of talks. And so thank you and goodbye.
Thank you to you also. Goodbye. See you next time.